Well, hello everybody, and welcome to the annual LTCI Market Review for 2025 and 2026. I am Gretchen Berry, the Chief Marketing Officer here at BuddyINS, and joining me today is, many of you know, Mark Glickman, founder and CEO of BuddyINS, Jason Dutra, Director of Partner Success, and we also have Joe Filipenko, our marketing consultant, who will be monitoring the chat today. So, before we get started, first of all, thank you for joining us. I have a couple of housekeeping items that I wanted to cover this today. I keep wanting to say this afternoon. First, everybody should be on mute, so keep yourself on mute. If you want to ask a question, please do so in the chat, and then at the end, we'll have time to do like a live Q&A, and you can unmute at that time. But if you could stay on mute, that would be fantastic. Thank you to everybody who submitted questions when they registered. That was super helpful. And most of them we will try to answer within the discussion that we're going to have. But if by chance there are questions that we don't get to, including questions that are in the chat, we'll try to address some of them over in the Facebook group. So you can hop in there over the next couple of weeks and we'll try to answer some of those questions that we didn't get to. The other thing is, if you think we love to see your smiling faces, that's awesome. But if you think you're going to be moving around your house or office, and I love a good house tour, but in this case, just turn off your camera because it gets a little distracting if we're watching people wander around their house. And then the last thing is this is obviously being recorded. So at some point later today, everybody who registered will receive an email with a link to the recording in case you want to watch it or listen to it again in the future. So, all righty. Without further ado, I am going to show you, we do actually have an agenda. So, but I want to warn you, we may not do this exactly as it is here because it's just going to depend on how the discussion goes. But we are going to try to cover, first of all, what we got right and what surprised us about 2025. We're going to talk about the current market landscape. Then we'll hit on the strategic implications for advisors. So what you can expect and things you might want to be aware of if you're going to build your business. And then we're going to go into some screen sharing. Jason's going to help us with that. And we're going to do the mother of all case studies, which is a case study that has a lot of different elements that we wanted to make sure we covered with you. So we are doing, we're going to show you an actual case study that we are working on now. So that should be exciting. We'll talk about the technology and what we're building, and looking ahead at any risks, opportunities, and readiness that you need to be aware of for 2026 and 2027. Give you our closing thoughts, and then we'll do the live Q&A. So hopefully there are no questions. Mark, Jason, do you have any questions? Are you ready to go?
No, I'm just excited.
A jam-packed agenda for us today.
All right, I am going to stop sharing here. And we're going to start with our chat. Okay, first question, Mark, is for you. What did you anticipate would happen in 2025 that actually did happen? So it didn't really surprise you. So it was something that we predicted that did happen. And then what didn't happen, or what did surprise you about 2025 and the LTCI market?
Okay, well, I think the trends that we predicted have continued to come to fruition, where we're seeing more custom solutions tailored for particular market segments. So rather than, 20 years ago, we used to have standalone long-term care as one of the only options, and now we have a lot of different types of products. So we have a product lineup for individual products for like the 65 plus market that has emerged and is growing. We have a marketplace for worksite that is reemerging and growing. And then we have kind of that core 35 to 65 market, which has its own product lineup. So we're continuing to see more custom tools for the job instead of more general tools that apply to everybody across the board. So that's definitely something, those trends are continuing. In particular, the worksite market, seeing tremendous growth there now with plans down to companies with as few as 3 employees, where you can get guaranteed issue underwriting. So that opens up quite a lot of opportunity. The things that surprised me was we talked a lot about legislation over the past couple of years, payroll tax legislation in particular, and that seems to have died almost entirely. We're seeing states that are continuing to do studies and task force, but not true legislation that's, moving forward like it did in Washington State.
Hmm.
So I'm not sure if anybody else has any updates, but feel free to share in the chat. But from our perspective, right now, that's pretty dormant. The first couple of months of the year is when they talk about new legislation, so it's not out of the realm of possibility. We might hear, a California, New York, move forward with some legislation, but I would say it's a long shot from what I'm seeing right now.
Jason, do you have anything else to add on that? Anything that surprised you or?
Um, it's hard to say surprised. I guess I'm more surprised in the actions taken. Um, just in the market's emphasis toward serving the I'll say extra senior market. So those who are maybe older age, maybe past their working years, maybe with some underwriting challenges. We've really seen a lot of products rise up to meet folks in that tier and provide coverage to a group of people who probably need it most, but have had a very difficult time acquiring it, either for budget reasons, health reasons, or just the way the products we're used to using, some of the OG products. The plan design just doesn't fit them very well. So that to me is really speaking to the annuity market. Number one, I think the annuity long-term care market has taken some great steps forward, especially recently with the release of Nationwide Care Matters Annuity, a very, very interesting product that has really quite conservative underwriting from the sense of, I guess I should say lenient rather than conservative, targeting around a 95% acceptance rate and really showing excellent plan design for those in older ages. And of course, the continuance of the short term care market, helping to meet those who may not have the capacity to make a single premium or those with health challenges. That market still seems to be proceeding quite strongly, and other products like, Bankers Life continuing the amount of incredible growth they've had over the last 1 to 2 years with their traditional long-term care product that's designed like a short-term care product. So carriers are really kind of doing that exercise of what other levers can I pull? What other knobs can I twist to serve a historically underserved market? And early results are really, really good from what I've seen. So that's my biggest surprise.
That that's a good segue for my next section where let's break out individual market versus group. Okay. Are you, do you think we will continue to see dominance of hybrid products on the individual side? Mark
On the
or
individual side, it's a good question, and it is a good segue because I think the other two product types I mentioned are rising up and taking some of that market share overall from hybrid carriers. And many of the popular hybrid carriers are actually getting into the annuity business themselves if they weren't already. So that's taking a bit of attention away from some hybrid products. So I would say, with regard to overall market share, hybrid products are still in a very dominant position, but that is not to say that this is something that is a number go up forever type of environment that we're in with hybrid long-term care. I think some carriers are sort of seeing their sales flatten out a bit or not seeing the increase that they previously were. But I still think hybrid long-term care is in a great position, and we're still seeing new products, new policy generations with very consumer-centric benefits coming into the market. So we have John Hancock's Life Care, and we have Secure and Secure Care 4, which was really just sort of announced recently coming soon. So there's a lot of health in the market
Yeah, I think, isn't that the one we just heard about today?
today. Yeah.
Where's
So
Phyllis? There she is. I see Phyllis. Yeah. So, um, then are there any notable product enhancements and like pricing dynamics going on right now, in the individual market? I'm sticking with individual right now. Mark?
Yeah, I would kind of concur with what Jason was saying is we're seeing more carriers entering the hybrid space, but we always have to kind of explain what we consider a long-term care hybrid or a linked benefit product as different from adding a chronic illness rider or an acceleration rider to a life policy. There's obviously far more of those policies being sold today, but probably from a life first perspective and the long-term care is secondary. On the linked benefit side, which I would call an extension rider product, we're seeing continued growth there, but there are still more traditional policies sold than linked benefit policies sold in terms of probably about 55% based on the LIMRA survey are traditional and 45% are linked benefit. On the premium side, though, the premium average premium is much higher on the linked benefit side, even if you annualize, the single premiums, where probably about 65% of premiums sold are on the linked benefit side. And that trend continues to go in that direction. So from our perspective, new products leads to more sales, like you talked about with those two carriers. And it seems like they're moving faster to put out new product generations than on the traditional side. Where we do see some movement there and we do have some new carriers, it's a little bit slower to see that growth happening.
All right. Mark, I know you had a discussion recently with someone, I don't know who, but someone who questioned, or maybe not questioned, but was expressing their in, interest in, why we're targeting group.
Mhm.
So I think we should start the group section with a discussion about that. Why is group so important?
Yeah, well, honestly, a number of reasons, but we're really going after where we see growth. We're trying to get more people access to long-term care plans, right? I think universally in this room, we can all agree that that's our combined mission here. How do we help more people get funding for care, and professional care? We're seeing more entrance into the worksite space, than any other market. A few years ago, we had maybe two or three carriers that have, true group products, whether it's a traditional or hybrid, with long-term care focused benefits. This year, we're going to have over a dozen carriers, some of which have two long-term care products each. So probably 15 long-term care products that have emerged in the worksite segment. So there's just a lot more new entrants, and they're very competitive products. Some are priced lower than a fully underwritten individual standalone product, even though you're getting guaranteed issue and you're getting the life insurance benefit in addition to your long-term care. So I think you can't ignore that from a client perspective, that if the contract is written the same, in terms of the protections you have and your ability to get benefits out of the policy, and you're getting all these guarantees and a frictionless experience when you enroll, that's where, people are voting with their feet and you're seeing significant growth there. There are probably going to be more worksite long-term care policies sold this year than the entire individual market. And a lot of people in this room might be surprised to hear that because they're with a lot of carriers that aren't as familiar to us from the individual side, right? Like Trustmark and Chubb and the Standard now, has a product. So you're starting to see two markets forming. One which is catering to, like we talked about, the 65 plus, and you're seeing annuity long-term care and short-term care and alternatives emerging there. You're seeing the worksite market now starting to dominate that 35 to 65 space because it's such an easier access point, lower premiums, obviously. And you still have that individual market that can supplement, and provide more comprehensive coverage. But I think people are saying, hey, I didn't want to pay this price for individual long-term care, and through my work site, I can get something more affordable.
So the emphasis when it comes to group, would you say, is less about ensuring that you're fully covered for long-term care and more about let's get you into a base plan we can, or what we call a base plan, and continue to educate, and they always can have an opportunity to buy up by
Yeah.
traditional. Yeah.
Yeah, that's a great point. I mean, a big part of the work site you'd asked about, what are the benefits are the fact that you have this endorsement from a trusted entity, whether it's their employer or it's sometimes an association that they belong to, that's saying, pay attention to this education and this message. And we know that long-term care is all about education. So the ability to really blast that information out there and have mass market appeal, that's what's getting people to start off paying attention to it. But when they get in the policy delivered, they're not disappointed by what the outcome is. We may know that the cost of care in the future is quite high, maybe $25,000 a month if you go out, 20, 30 years. But if people get, 4,000, 6,000, 9,000 of that covered, or to put it another way, if they're getting a discount of 6,000 or $9,000 off of what they would otherwise pay out of pocket, they're very happy that they have that plan in place. So we can't get caught up in just thinking about, well, if you're not getting the full cost of care, you're doing a disservice to yourself. We have to think about how do we get people to ease into a policy, especially when they're younger and those prices are lower, with the ability to add more coverage later, Gretchen, like you were saying, because these policies aren't going to coordinate benefits typically, so you can claim on multiple policies. And it's much better, like you said, having something than not having anything at all. So we can't give them an option where it's like all or nothing, because people are choosing not to do anything when
Right.
they're given that option.
Right. Gail asked a good question related to that, and that is, does worksite equal voluntary? Yes. Intending to qualify for the exemption from ERISA? If so, are there any concerns about recent litigation?
Well, okay, and people may disagree with terminology here. Okay, so we use words kind of interchangeably. Worksite, I think of anything that an employer is offering to their employees. It could be employer paid for, or it
Mhm.
could be voluntary and the employee is paying out of their paycheck or through an ACH direct bill. Okay, so there's a wide variety of worksite cases. Getting into ERISA, we're not running into a lot of issues with legislation. We are hearing about some litigious folks getting into trying to sue large carriers and brokers, more under the guise of being a fiduciary, because they're saying, well, if it's an ERISA plan, then you have to do what's in your client's best interest. Why are you getting paid on commission? And they're kind of questioning, what the loss ratios are and the commissions that are being paid. But that's more, I would say, an opportunity to attack people with deep pockets than that may have substance to them. So we're not really worried about that. And there's a whole nother debate about what is considered to be ERISA and what are the requirements. But in general, I would say all of these plans that our employers are sponsoring, they have to file information they provide to the Department of Labor about what they've provided to their employees. But it doesn't really require them to do a whole lot more than that from a compliance perspective.
Okay, you mentioned employer funding, and I want to make sure we get
Hmm.
this point in. How do you see that as a participation catalyst?
Well, yeah, employer funding is interesting because we've always had these ideas since the, HIPAA was enacted in the late 90s of doing a base plus a buy-up type of plan. So getting a very small policy paid for by the employer that everyone receives and allowing them to add more coverage to that, or to do an executive carve-out type of strategy where you select based on job title, primarily who gets the plan that's employer funded. Um, it's really critically important, mostly because when the employer is sponsoring the plan, they're much more likely to give you access to the employees to educate on it, and the employees are more likely to participate in that education because they want to see what they're getting. It's not about the little base policy that they're receiving, it's the fact that it's starting them off with something for free that they can add to. Most people in practice that get that small base plan, if they don't add a voluntary policy on top of that, they're much more likely to drop it when they leave the company or when they retire anyway.
Mhm.
But the people that participate are 3 times more likely to buy voluntary coverage when the employer pays for that base plan. So it's really about getting that higher voluntary participation. That's why we really try to encourage employer funding. And a lot of these new worksite plans, these hybrid plans even, you can go down to rates that are very inexpensive, 5, 10, $20 a month per employee, per month. So that makes it much more accessible for employers to fund that benefit, especially in the face of higher healthcare costs that they have to deal with at the same time. So we're trying to create a win-win where the employer is paying for something that they can afford to add to their budget, but it's incentivizing voluntary participation where most of the plan is really paid out of the employee's paycheck.
So these group policies, guaranteed issue, go down to, I mean, there's some pretty small groups. You can go down to three, right?
Yeah, I mean, there's a lot of markets in worksite. So most of the carriers are going after the 2000 plus employer segment because that's where, obviously there's a lot of scale available. And in fact, most of the Fortune 10 companies, many of which or most of which are technology companies, now offer long-term care as a voluntary benefit to their employees. So those big, huge companies are leading the way by saying we want to be differentiated as an employer of choice by having this, the best benefit portfolio available for our employees. But we are seeing that now coming more down market. And to your point, Gretchen, yeah, we've had 2 carriers enter just in the last 24 months with programs that go down to 3 to 5 employee minimum to get guaranteed issue. Now, what we're seeing with those plans is people are not participating in them strictly because that they have pre-existing health conditions or issues. They're participating because it's easy to enroll. You can kind of auto enroll. Sometimes you don't have to fill out an application if the employer is paying for it. Everybody gets enrolled off of a census. And because of that ease of access, that's probably the biggest reason it is appealing to both the client and to their benefit broker if there is one involved. So yes, we're seeing a lot of our partners who are, BGAs and brokers buying it for themselves and for their staff. Buddy, we just offered it to our employees. We just did our own enrollment with the worksite product, right? So we have access to it. And that's where it's starting, is with the folks that know long-term care really well, jumping in and taking advantage of the great deals that are available there, from the pricing perspective. But it just has made it much more accessible because we have these much lower minimums now than we've ever had before, probably in the last 15 years.
Right.
Hey, Mark, real quick, we got some great questions in the chat I wanted to bring up real quick. I'll kind of lump them together. So, are the worksite plans portable? I think it's a great one. One also asked, define base plan. Is that term life, UL, VL, etc.? If term life, is that group term life? And
Hmm.
another one, which carriers are offering a 3 to 5 employee? So, small.
Okay. Yeah, great questions.
Can we have Jason respond to the
Sure.
portable one because he's all about portability?
I am. I think that's actually one of the most underrated things about these group plans, is that they are portable. And when you think about it, just makes a lot of intuitive sense with a benefit like long-term care. Though we know long-term care could be used at any age for any number of reasons that may cause you to enter a claim, most people are going to use long-term care benefit after their working years. So these plans are portable. When you enroll, you are essentially receiving an individual certificate. So this plan is able to be taken with you when you separate from your employer, when you retire, whatever it may be. If you when you separate from your employer, you can take this plan with you. Now, there is generally some homework you have to do to be able to take that with you. You will generally have a period of time around 60 days to contact the carrier and say, "Hey, I want to take this plan with me and I want to pay the premiums." So, for example, if you have a payroll deducted premium that you're paying, you'll need to take that over with a checking account. If your employer was paying for a plan for you, you will need to take over that premium for yourself. So there are things you need to do to be able to port the plan, but yes, they are all portable, and it can really sort of change the complexion of how you position group long-term care. It can kind of be imagined as a quasi-retirement benefit, right? This is for after your working years.
Yeah. I, to answer the other questions, Joe, that you had is the best way to think of these worksite products is they are the same types of products that we see on the individual side. Most of them today are hybrid plans, but they're designed to be built on permanent type of coverage. The most popular one, ironically, is actually term life, though. And a lot of people ask, well, how do you build a permanent plan off of term life? They've designed the plans to be a term, level premium term to age 121 or a level premium term to age 100. Okay, so it's not like your 10, 20, 30-year term. It's a term to an age at which you're going to be able to keep the policy, as Jason pointed out, with portability and not have the premiums change. The way we think about all of our hybrids, whether it's individual or group that are linked benefit, where the long-term care is first and the life insurance secondary, is most of them have that long-term care extension rider. So even though you're accelerating the death benefit to provide your long-term care benefits, the real reason why it's long-term care first is that once you run out of your life insurance, you get a larger amount of long-term care beyond that, which could be double, triple. We even have a carrier in the worksite side that now has 5% compound inflation on the long-term care. So you might get 10 times more long-term care than your life insurance. And when you look at what that total protection is, that payout is, it's long-term care first if most of your benefits are provided for long-term care, not life insurance. So that question about, well, what do you consider the base plan? For us, it's about what level of long-term care are we starting at? Is it $1,000 a month that the employer is paying for long-term care? The employee can add another 4, 6, 9,000 a month on voluntary coverage on top of that. Yes, the base plan also has life insurance. So if you don't use your long-term care, there is a life insurance payout, which might be $25,000 a face amount of life insurance. But again, that's secondary to the fact that we're buying this for long-term care. That's just a nice to have so that people are comfortable paying for a premium for a long period of time, knowing that even if they don't use long-term care, they're going to get a benefit from the policy. And that's just the hybrid value we see, whether it's worksite or individual markets.
We're getting some
Uh,
more good questions.
Good.
If
oh,
I could
go
just
ahead.
help you
Go ahead, Jason.
with those.
Yeah.
Um, so also our small group carriers are the Standard and Transamerica. The Standard will take groups down to 3. You will need to add another voluntary benefit to a group of 3, 4, or 5 to get up to what is a 6 application minimum. And Transamerica is pretty cut and dry, 5 application minimum, guaranteed issue down to 5. But 2 good questions I saw in the chat, Mark. Are they 101G or 7702B? Kind of a nuanced question or a nuanced answer. And then is this tax deductible?
Yeah, and the plan structures, we're going to see in 2026, 2 standalone carriers come into the market on the group side as well. So it's not limited to any particular type of product, but we are seeing term life, as I mentioned, whole life, and universal life hybrids with long-term care extension riders attached to them. Many of them are 7702B, but not all of them. However, when we look at the contracts, because what we care about is how does the contract read, most of those contracts are written the same, whether they're 7702B or 101G, unless it's an older generation of worksite product, which is still waiting to get the new language approved. So do you remember on the individual hybrid side how it used to say you need a permanent condition to trigger your long-term care benefits, and then all the carriers removed that permanency requirement? The same thing has happened on the worksite side where almost all of the hybrids don't have any special permanency requirement, and therefore it's going to usually be your 2 out of 6 ADLs or severe cognitive triggers, even if it's a 101G rider. Now, the tax deductibility is a nuance on there. Most of these worksite products today, the true group ones, are not tax deductible, whether they're 7702B or 101G. And that just has to do with separating out the LTC premium, right? Because you have to have a separately identifiable premium to deduct it. I will predict that that will change in the future as carriers are looking for more niches. It behooves them to separately identify the
Hint,
premium to
hint.
take advantage of that, but they haven't yet done that with the current True Group products. So you still have to work with individual products to get the tax deductibility for businesses. In terms of the benefits, by the way, there really isn't a strong difference between 101G and 7702B. You get tax-free benefits generally either way. And most of these plans are also indemnity, not reimbursement style payouts. I know we're going to have probably more questions that we can answer in the chat, but hopefully that covered a few of them.
Fire away. Yeah. I do want to, before we go on to the case study, which will be next, I did want to cover something that we talked about the other day when we were talking about group, the education opportunities that come with group sales, and how it creates multiple markets. Do you want to expand on that, Mark?
Yeah, I mean, in the individual side, we do a lot with national accounts that are endorsing programs, doing webinars, providing education to individuals, but it doesn't happen in as much volume. We don't get as much participation that as we do on the worksite side. And a lot of that has to do with the fact that when you have a true group worksite plan, you typically have an enrollment period and a deadline. And that deadline is getting people to pay attention to the offer because this is a special enrollment period where you're getting guaranteed issue underwriting, right? If you miss that window, then you might have to go through medical underwriting to get this coverage. So pay attention. So we're seeing a much stronger push in the work site and with associations because of those enrollment periods. Like I mentioned, the top 10 companies in the United States, the Fortune 10 companies, all have long-term care, and they have hundreds of thousands of employees in some cases. Like Amazon has enrolled long-term care as a benefit for their employees. So when you're actually pushing that message out, hey, attend this webinar about our new benefit, and you're sending it out to hundreds of thousands of people, you're getting a lot more people to the table to be a part of that education. So from our perspective, it really segues well with what you can do with digital marketing today, right? Employers don't necessarily want benefit counselors on site as much anymore. It'd be great if you get that opportunity, but most of the time they prefer to have a digital session. They really lean on emails to be sent out to their employees for those new benefits. And there's a lot you can do with getting people to a website. We do a lot with our enrollments, in our landing pages so that people actually have a chance to go through that educational experience on their own with the guidance of like a virtual long-term care specialist, which might be through a webinar or it might just be through the experience you can do when they visit that web page. So these products and long-term care planning itself isn't something that you can explain to somebody that's never seen it in 15 minutes. And that's really the challenge, is having multiple opportunities to get in front of employees so you can layer on that knowledge and build a journey for them. And when they drop off that journey, to remind them to get back on to that journey, especially before they have that enrollment deadline.
Well, that was an excellent segue to Jason's case study. So I think we should jump right into that. Jason, what do you think?
Yeah. Watch the door for me because I still
I
see
will.
people coming in and out because I'm going in, and stop me if I ramble on too long. But I just wanted to give everybody that's on the call today a look into a group long-term care case using an example of a current group that we're working with right now. But I'm going to kind of do this in two parts. I'm going to do the first part showing you our sales tools that are, you know, Buddy INS developed tools that we use every single day. And if you are interested and are going to be diving into the deep end of group long-term care, these are tools you're going to want to know about and know how to use and know why they are used. But then I'm just going to do a little bit of a wrap on the group that we're working with because it's a very, very interesting case study in general, but it's got so many layers to it that encompass all of the ways you could work with a group in one group. If that makes sense, great. If it doesn't, it will probably make sense to you later. So I just want to go in and share my screen on the Buddy system for you guys and let me know if you've got that nice and clear on your screens. So, for those of you who don't know, the Buddy system is essentially our agent portal that is available to anybody who wants to have tools by their side, reference items by their side to learn more about products, marketing materials, basically the heart of what we can offer you, spilling out all that we have about long-term care into one place. And I'm going to focus right now on the group tools, but you can see here on the dashboard, we have the availability of group and individual plans to look at here. And I'm going to introduce you really to our three main tools and give you an idea of number one, the order we're generally using them in, but also why would we use them. So really right in order, we're going to start with our product buddy tool. So let's just do this from the lens of the example group I'm talking about. This is a very, very large organization, but it's comprised of offices around the country. Okay. And one of the things we did at the very beginning of working with this group was talk about an employer funded plan for the corporate team at headquarters. So, what we needed to do was figure out what is a product that is well suited for this group based on what we know about them. And Product Buddy is a tool that allows you to take a couple very simple details about the group and really narrow down what products we can even look at for this group. So I'm going to say the executive group in headquarters or the corporate team was about 40 something employees. And I know they were located in California. So you'll select your state in the drop down here. You'll mention that it is an employer group. And I think it falls right in the range of 5 to 49 employees. And in California, we really kind of narrow down to one result given those parameters. But if you, just for example's sake, move to a different state like Florida, and maybe we're dealing with a larger group of 100 plus lives, you can see we have six carriers, well, four carriers, six products that you can actually choose from using this tool. So in cycling through each of these results, you can see different one pagers that are generated for each product that basically serve as your presentation assist material. So I can actually download this one pager here. And if I were to pull it up, I get a nice PDF that will be something that I can bring to a presentation to give the group an idea of how the plan works. What does the pricing and value of the plan look like? What are the specific product features in this plan? Who's eligible? and what are some sample rates for employees who are age 35, 45, 55. So for many, I know we're used to maybe bringing in a larger presentation, PowerPoint, and you can certainly still do that. I think that's a great practice, a practice as good as any. But what we've tried to do is condense on one page all of the relevant items about the plan or plans you're going to be presenting to the employer that you may go over. So, very simply, Product Buddy is meant to tell you based on the state and how many employees there are, kind of at a base level. What do we have available to us? And in this case, for our case study, the standards plan in California was the only option, but because we're in California, we have access to a pretty special plan design that really makes it the best option that we've seen out there on the market right now for group long-term care in many cases, primarily for the reason that California and Utah have a special plan design that allow for 5% compound inflation protection on the long-term care benefit. And not only uh, is inflation protection available on this, not only is it 5% compound, but for those of you who may say big deal, I can go out and get this on the individual market. We have guaranteed issue underwriting, and we have quite affordable rates for this coverage. So you can see for a 45-year-old employee, $184 a month will allow you to access $75,000 of death benefit. But from that, you can accelerate that death benefit at 6% per month and access a monthly benefit that starts at 4,500, but because of 5% compound inflation protection, it's going to give you $14,000 of long-term care benefit a month at your age of 70 for about 34 months. And that's a total of about 500,000 of total long-term care benefit. So a very, very value-rich plan that, again, checks a lot of boxes. For many, affordability, you can start at lower benefit levels and take advantage of that inflation protection and still come away with something for budget sensitive folks. Guaranteed issue underwriting allows for an easy process. And given that it's a whole life plan, the benefits and premiums are contractually guaranteed from the moment you purchase the plan. So a 45-year-old who purchases this plan at $184 a month is contractually guaranteed to continue paying $184 a month for the plan. So this is a bit about how Product Buddy works, but this is also part of the presentation that we made to the corporate team of the group I'm talking about here is even starting at a small amount of employer-funded benefit for everyone. I believe we did 25,000 of death benefit as a base plan for everyone. Many employees actually bought up to more coverage, but we had about 50 or so employees automatically participating in this plan, automatically getting access to long-term care coverage with 5% compound inflation protection. So that was part of the presentation, and we'll go into a little bit more about how we actually came up with the employer-funded costs in this case as well.
I just want to point out we're at 147, so I want to make sure you have enough time to go
I
through.
really appreciate you hurrying me along.
Can I interject too real quick? Not
Of course
to
you can.
elaborate, but I had a BJ call me yesterday. It's kind of was timely, and he said, "Who are you?" I was like, "What do you mean, who am I?" He said, "What does BuddyIns do?" I'm sure a lot of you in the audience probably had that question come across your mind. And I just want to kind of answer that question, and it will highlight what Jason's showing here is we have this community. You're a part of this community just by being on this webinar, right? There's no cost to being a part of our community. We have twice a week study groups. We want to uplift the long-term care industry, but our primary business is actually helping implement these worksite long-term care cases. So we partner with BGAs. So if you have a BGA that you work with, they help you with the back office support. You can use these tools. Jason's going to show you how we quote the group cases. so that you can, not have to rely on the carrier's maybe lack of quoting tools. So you can come here and get those quoting tools. And when you need to implement those cases, that's where we come in and help implement the technology, the marketing, the education, everything we're talking about. We wanted that to be turnkey, and we wanted to get more individuals access to long-term care. There are very few firms out there that do enrollments for small groups. And that's because you have to be very efficient with how you do them. And that's for everyone's benefit, including the client, right? Because there are minimum participation requirements there. So again, as you go through this, again, just realize that you can work with your BGA. We're not here to recruit you. But if you are trying to get into that group marketplace, I know there were a lot of people with questions about it. Come to our study groups. If you have a group case, that's the best way to get started. That's why we're going through a case study, and we'll help walk you through how to implement, because that's really our main business and role here.
100%. And I'm going to go into overdrive now, lightning round. And hey, this will leave you with stuff to learn after the webinar, so I don't feel pressure to cover every single base. But I am going to go through 2 more tools for you. So yeah, this is great. We've gotten product features. We've filtered out what carriers are not available to us, right? And we're narrowing down what seems to be the primary couple of options that we will bring to the group to show them. But all I can really see is a sample for an age 45 employee or a couple of rates for 35, 45, 55. And that's really where the group quick quote calculator comes in. And if you were here in the beginning of last year, the quick quote calculator has grown up in a big way. So there's probably a lot to catch you up on. But essentially, what this is the first of its kind that I know of comparative quoting software for group long-term care plans. That's the most plain and simple way I can put it. So we have a number of different plan designs that are available within this calculator, from the standard, even Unum, because we're doing a lot of comparison with existing Unum plans right now, Chubb, Transamerica, and Trustmark, and different plan designs or products for each. So in just showing what we were looking at from the standard with their 5% compound plan design that's available in California, now we don't have to just look at sample rates. We can go through and say, hey, Mr. Decision Maker, who is currently thinking about an employer-funded plan for your corporate team, we can look at your specific age and we can choose a different benefit level for you so that you can get an idea of the value of the plan. What's your monthly premium? What will you pay in total if we want to look out to a claim age of age 80? What will that plan look like for you? And what's the overall value? But we can also hit that little plus button that I just hit, and we can compare this to another plan. If for example, we had another plan available to us, on the right-hand side chart, what I can do is actually compare these 2 plans. And with the standards plan, it's probably best to take a look at these for the claim age set to the current age, so we're comparing on the same monthly benefit. How does the pricing actually compare between these plans? And how does the value actually compare? So I could be here all day. There are tons of different comparisons that I can give in this case. That's why you should join the study group. We do pricing deep dives every once in a while. You'll get a lot of info there. Last tool I want to take you through is our census quote tool. Now, for the decision maker who is looking to find out their own premium, I have even better news for them, because what we can do, I've secretly had dates of birth copied to my clipboard this whole webinar, and none of you have known about it. What you can do in the census quote tool is paste dates of birth from your census into this tool, and you can select a carrier and plan design. So we'll say Allstate California. In this case, I'll keep all 3 of those cells, Allstate, and we can select different benefit levels. And this is going to do a number of things for us. It's going to tell us what the monthly benefit is for the benefit level that we've selected for long-term care. But it's also going to tell us, based on all of these employees who are in this census, it will tell us a couple of things. If we don't get pricing for this person, they have actually aged out of long-term care rider coverage and wouldn't be able to be included in the plan for long-term care coverage. But also what this does is it takes my entire census and it says it is $1,387 a month to get a plan for all but one of these 39 employees at the $10,000 benefit level. So being able to get instant pricing based on the census for all employees. And if I take you over here, we could say, well, we want to actually carve out these 8 members of our executive team. If you wanted to buy that benefit level for those 8 people, it'd actually be $389 a month to do that. And so on and so forth for the other benefit levels, right? You can get the aggregate pricing and you can get the pricing for a carve out group. So this is really a handy dandy tool, especially given that you can copy and paste all of this data, throw it into an Excel spreadsheet, and add whatever color you want to it. I just wanted to give you an idea of how our tools work to do that. But in the group that I'm talking about, we use landing pages that Gretchen and Joe put together for our enrollments that are second to none, truly. This is the main heartbeat of employee education for these enrollments. And we can take an employee kind of through their journey of learning about long-term care in general, but also learning about the specific plan that they can engage with and giving them their link to enroll in coverage all in one spot. We also include things like recorded webinar education and the like in here, but this is a really powerful piece of this that employees can access their own pricing when enrollment is live using this calculator to get an idea.
And Jason's Michael asked if that can be co-branded. Yes, the when we do an enrollment, depending on the level of the enrollment, we can co-brand the landing page, and then we'll have emails. You know, there's just a whole slew of collateral that they have access, or you will have access to.
Yep. And just to give you a quick kind of summary of the case study we worked on, because I think there's a lot to learn from it. I'm going to go fast, so you can watch the recording in 0.5 times if you'd like. But this is a large organization, smaller corporate team. So the organization is made up of offices all around the country. We did an employer paid enrollment with the ability to buy up voluntarily for that corporate team. And then for each of the offices, they actually got access to a blanket offer that is the same offer the corporate team got. There's no employer funding involved in that, but at each office level, those office owners can actually choose to pay for a plan for their employees as well. They can offer it voluntarily, or they can do an employer paid benefit, which they can also do a carve out for if they'd like. So this was a really kind of crazy multi-tiered sort of group enrollment. And we couldn't possibly do that without a large team, without advocacy from within and really key partners within the company helping us to get the word out. We couldn't have done that without the ability to have FaceTime with a lot of the office managers and staff at a company convention, but also we have a team of long-term care specialist consultants who are actually building relationships with those offices and helping them through the process of offering long-term care as an employee benefit. So, I mean, this thing was layered like a lasagna. There's a lot to be learned for it. I'm sure we'll have a greater case study session around it at some point. But I just wanted to kind of use this to illustrate that there's not much that is impossible in the group space as long as you've got number one, flexibility, number two, the willingness to kind of keep pushing that stone forward, and number three, really good advocates and partners by your side to make it work.
I'll mention one other thing because there was a lot of questions about marketing and prospecting in the chat. because you have access for groups as few as 3 employees, you already have a lot of clients that could potentially do this for their employees. Even those that own individual long-term care may want to offer this as a benefit to their own employees. You may want to offer this as a benefit to your staff. We are currently seeing Unum is discontinuing their traditional long-term care for new employees as of February. We've gotten probably 3 dozen censuses from Unum cases from employers that say, I still want to offer this long-term care as a benefit. Can you get me a new option? So there's a lot of opportunities. I call that more like a fire sale opportunity where there's an immediate need. And we're not here to replace the old plans. Like Jason mentioned, they're portable. So they can keep their Unum plan and add a new plan and claim on both of those policies. They can get more comprehensive coverage this way. So you're not doing them a disservice by bringing in new options for them. So there's quite a lot of opportunity in this market. And I'll just say one more thing. I predict we're going to see continued more options. There was questions about tax deductibility. We're seeing now individual products trying to build themselves to be worksite capable, right? So maybe we can get more simplified underwriting for individual products or instant issue, and now you can offer that as a worksite product as well. So there's no real limits to what you can do here, whether it's group or individual. But I think this is going to lead to extreme growth in the marketplace, and that's going to be good for all of us. Long-term care is back, it's credible, it's growing, and that's a message you're not hearing out there, are you? Very much. So we're seeing it firsthand. I think you're going to see that here too.
We do have a question that I want from Adele. If you have a multi-state employer, can you carve out classes that are employer paid and voluntary for the rest?
Yeah, the nice thing about the group market is you situs it in one state. All the employees get that one state policy, regardless of where they reside. And you can carve it out just like you could with the traditional standalone long-term care. Generally, by job title is probably the most clean way to do that. But there's various other safe harbors to use there too if you want to fund it for a specific class of employees.
It looks like we're going to go a little bit long. So if you want to hang on with us, that's great because I do want to open it up for questions. Max asked, is all state standard opening up to taking on those established Unum cases?
Yes. Yeah, they're very encouraging of those cases, as are the other group carriers as well. They may have questions about, are you replacing a plan or do you already have long-term care? So that tends to be kind of the only enrollment challenge, but we're working with them to make that more streamlined too.
All right, let's open it up for questions. Is anybody, I mean, there's been a ton of questions in the chat. So what we don't get to, like I said, we'll try to drop those into the Facebook group over the next week or so. But does anyone want to ask a question? Come off mute, ask a question?
Raise your hand.
Brave enough?
Another quick note too, the tools that Jason went through also, I linked in the chat because for a short time we did open them up to all of you for a short time to go and play with because it's so much to play with. It's so exciting and how helpful it is trying to find those solutions. And so I'll link it again because it's kind of scrolled up, which is good, but I'll drop it in there again. And you can go play with the group quick quote and the group product.
Thank you.
Yeah, actually, I'm going to play devil's advocate, Gretchen, a little bit.
Okay,
I'm going to give you one of the objections I get about the worksite plans, which is sometimes these plans have gaps in them, right? Just like they have a 90-day elimination period. Maybe it's a term to 100 and your coverage ends at 100. Maybe your benefits can be reduced at a later age, from some of the carriers. And the answer that I give to that objection is the point of this exercise is to get people to start off with long-term care, and there's nothing that limits them from adding individual coverage to that. Is that a bad thing to have a policy with gaps in it? I think it actually adds more options for people. We talk about short-term care as a gap filler as well, right? Where you can stack short-term care on top of long-term care. You can fill deductibles. Think of a worksite the same way. It's not designed necessarily to be the be-all, end-all policy, but it is designed to get people meaningful coverage that they plan to keep. And I think that's the key to having success for your clients is buy something you plan to keep. The other objection I hear a lot, Gretchen, is why is this too good to be true? Sometimes this pricing looks like, are these carriers making the same mistake that the old standalone market did? And the answer is there's a lot of similarity in that remark because they are pricing these worksite plans with a lot more lapse. I've heard that story before, right? Now, these are guaranteed premium products primarily, so you're not going to necessarily see rate increases like you did with the standalone products. But the reason they have a lot more lapse is because people don't keep their policies when they leave the company, especially if it's a payroll deduction. So if we do our job well and educate people, we're actually going to be better in terms of persistency and people keeping their coverage than the rest of the marketplace. If those actuarial statistics change, the carriers will adjust their pricing, but they're going to adjust it for new groups going forward. Your client has locked in their first generation pricing rates today. And that's why I have a sense of urgency about this marketplace is I don't think it's going to be something that's going to sink, the carriers or the industry or anything like that. I think they're going to learn from what those statistics look like, and your clients are going to benefit by being an early adopter to this marketplace. But it will get adjusted over time, and I think you will see stability in this marketplace. The carriers aren't naive, right? This is not a new market, long-term care. We have a lot of experience. Even in this room, everyone collectively here has a ton of experience to know what those basic things are. So I just wanted to mention those because they oftentimes come up, and you will hear them from your clients too, these same questions.
Hey, Mark, you mentioned classing out. Can you do a salary versus hourly?
You can, yeah. Most of the group carriers are going to look for actively at work at least 20 hours a week. So 10 typically is part-time or full-time employees, but you can class it out based on salary. You can class it out based on job title, or you can class it out based on how long they've been with the company, tenure with the company. The easiest way to do it tends to be salaried employees with certain job titles, for example. That would be a pretty common way to do it.
Perfect. Thanks.
You're welcome.
The question came up, how to reach out to discuss contracting with carriers.
Yeah, so first thing I would say is go to your BGA like we've talked about first to see if they have access. If you are a BGA and you don't have access, Buddy can help you get access to the carriers, to the contracts. But the real thing you need is you need to have a clear strategy for how you're going to enroll the groups. The carriers don't provide that to you, right? Their enrollment platforms may not give you a modern experience, application experience. So that's where I would encourage you to come to us to help make sure you have a good outcome when it comes to the enrollment itself. But they're not hard to get access to, the carrier's contracts. Yeah.
Sorry, I didn't mean to interrupt you. So we use an enrollment platform, which in looking at the information that Jason shared, we can build this out. Will you work with us, and will the carriers accept an EDI fee to final enrollments and on an ongoing basis accept that EDI fee on a weekly basis as new hires come on and terminations occur?
The answer is probably yes, yes, and yes. But devil's in the details. So you kind of have to work through that because each carrier is a little bit differently in terms of how they handle the EDI. One of the things that we did is we built a long-term care specific enrollment platform that integrates with over 100 other leading, benefit administrative platforms. So it is designed to be flexible.
So can you provide a link? Can you provide a link they'll click during enrollment that'll take them to your platform? They complete their enrollment there, and then you've captured that?
Yes.
Perfect.
Yep. And it will automatically follow up with the employees so that at the end of the enrollment, they're reminded that here's your last chance to enroll. So you as the broker don't have to chase down individual employees.
Excellent.
Yeah. So the technology, right, that is really why we're here, is to say, hey, you can operate in this market, whether you have experience, like Mike, you have a lot of experience in this market, or whether you're new to the market, we can make sure that you can have a good enrollment experience for your clients. But the key here is making sure that you understand the value of offering this, and it's a compelling story so that your clients want to move forward. Because as you know, getting clients to want to move forward with long-term care is the difficult thing. Everyone wants to kick the can down the road and delay that, and the employers are no exception, right? They have a lot on their plate. HR is really busy, and this is one more thing they have to do. So to the extent you can make it easy for them, that is really the secret to success. And Mike, obviously, that's why you're asking those questions.
Mark, it's Gail. I have a quick
Mhm.
question. How successful have you been to target and educate the spouses and partners? Because a lot of
Yeah,
times, in my experience, I've met the spouses of the partners, say at a law firm, and they said, I didn't know
yeah.
we could get long-term care insurance. So how does that work with your basic formulas?
Yeah, it's all about education, and a lot of it's culture, right? As the employer have a culture of trying to include spouses. Do we do webinars? We can do them at night and on weekends to include spouses to attend live. Are they willing to meet with a long-term care specialist benefit counselor who's going to try to encourage them to bring their spouse into the conversation? So it is group to group. We've seen different success rates, but by and large, we typically see much higher spousal success rate than the rest of the industry because we are encouraging people to buy plans for both themselves and their spouse. And some of the carriers have guaranteed issue for spouses now too. So you can have a great option there. I think you went on mute, Gail. We can't hear
I
you.
remember a long time ago, if that spouse was working 30 hours a week and you indicated that they could get an underwriting concession as well. Okay.
Yeah, yeah. In this case, it's built into your proposal. So you're getting an underwriting concession just because you're doing the group product.
All right. We are
Mark,
10 minutes. 10
Mark,
minutes. Oh, go ahead, Van.
Mark, can you tell us a little more about how we can get started working with Buddy? If we opposite, like I'm one that's never done with
Sure.
the group work and done this, just tell us a little bit more about that whole process.
Yeah, I would say we try to make it really easy to be a part of these types of sessions. So twice a week we have a study group, and I would encourage you on Thursday to go to our worksite study group. That's a great way to kind of get involved in learning, some of the nuances. We can only cover so much on a webinar like this today, but since we do that every week, we cover different topics every week. And then getting access to that agent portal that Jason demoed, that allows you to do the quoting. So once you have like a particular group that you think is a good candidate, then we can work with you to figure out some of the logistics, right, in terms of contracting and how to do the proposals. But first, we want to help you find an opportunity. And that's what those tools are designed to do.
So it's something that I've read something about there's a membership, whatever. I think
Mhm.
if you can maybe I'm going to
Oh,
even send
sure.
an email to us, just say, okay, if you want to work with us, here's step one. You need this
Yeah.
membership. These
That's
are when
fair.
the group
Yeah.
sessions, all that
Van,
kind of
Van will include that in the, and Joe's listening, we'll include that
stuff.
in the follow-up email to the webinar.
Yeah, actually, you
Right.
bring up a great point, Van, and we don't want it to be confusing. Anybody in this room that's partnering with Buddy to do the enrollment gets access to the membership and the portal for free. There's no cost to you if you're actually doing cases with us. If you're a competitor of ours or have another enrollment firm you're working with, we've created a subscription so you can still access the technology at a small monthly fee so that we can give access to the whole marketplace to all the technology we're building. But don't feel like that's a barrier to entry. Again, if you don't have anyone you're working with as your enrollment partner, we can give you a code and you don't have to pay for any of the tools that we've shown today.
And do you find that people do this, let's say they're financial advisors, not just insurance related, but also financial advisors who do investment products, et cetera, that they get ancillary business, working with executives or whatever? What would you comment on that about beyond long-term care, what it leads you?
Yeah, it's a great point. I mean, long-term care is all about education and relationships. And you're building a long-term relationship with a client when you offer a long-term care plan to them. So there's a lot of ancillary benefits to that, right? Is that you have more products that you're working with clients on. It's going to be a stickier client relationship for you. If you're building a long-term care plan as an advisor, it's not going to take out of your assets under management when they have to pay for care out of pocket. there's a lot of common themes that we see there. And what advisors are doing now is they're saying, I've heard the long-term care market is bad, so I'm going to self-fund the need. When they actually don't know that the long-term care market is actually quite competitive and attractive now. So it's really just having them become aware that there are great options out there, whether group like we talked about a lot today or individual. We've talked about annuity long-term care and short-term care. Those are products they're probably not hearing about. And those have the same contract language for long-term care as traditional and life insurance based long-term care do in many cases. So it's just an awareness, I would say, issue, Van, more than it is, that they actually don't want to offer it. They just don't know how, and they don't know it exists.
And you have a process, I think, to help us maybe know what companies to maybe go after. You mentioned some like the Unum policies and
Sure.
data there. A lot of us don't know even how to start this or how to approach them or who
Sure.
to contact. Do y'all have a whole process for doing that and guiding us in
Yes.
that area?
Yes, yeah, and that was some of the tools that Jason was showing is here are the top carriers that are leading the market in terms of sales. Here's how to quote them without having to go back and forth and, getting proposals. That's the first step because that will actually make it more transparent what you're going to get as an offer. So you don't have to waste your time. If it's not a fit, you'll know right away. And if it is a fit, you can be more confident in moving forward and investing the time to go through those steps to get an official proposal. But we'll take you through that. That's what we're here to do is help
But
make
I was
sure
meaning
you do
what
that.
companies to approach initially, not just even the
Yeah.
quote, just how to do that warm lead to get in the door to
Yeah.
even start that process. That's what I'm talking about, that kind of thing.
Yeah, I think sometimes we as specialists get into the nuances. This carrier is better than that carrier. At the end of the day, if your client move forward with any of the top individual long-term care or worksite long-term care carriers, they're going to be very happy with the outcome, right? The differences in a big picture sense are not that different. So I would just pick one or two. I wouldn't even worry about which carrier. I would present the concept. If the client likes the concept, you'll be able to shop multiple carriers and pick the best one for them.
I think you're misunderstanding. I'm not talking about
Okay,
the long-term care carriers. I'm talking about the
sure.
companies with employees to
Oh, I'm
approach
sorry.
about offering long-term
Oh,
care.
I'm sorry. I
I thought
misunderstood you.
you're talking about the
Yeah,
carriers. I want to know, do you have a process that,
we do.
ABC companies, CBS,
Yes.
these companies are losing their Unum for this, that whole marketing kind of thing,
Yeah,
who to
we have
approach, how
a
to approach it.
sample employer presentation that you can actually
Yes,
download.
yes, all
Yes.
that kind of thing. That's what
All,
I
all of
want.
that is also in the portal under the marketing section of that portal.
Mhm.
I'm sorry I miscommunicated
I
that.
apologize for not listening closely enough.
That's all right.
All
We got
right.
it covered.
Yeah, and I
All right.
appreciate you guys, by the way. I know we're going a little long here, but all your interest and all your questions are fantastic. So
Yeah.
thank you.
Well, I wanted to say, first of all, that everybody who was on the call, except for Phyllis, because she already has one, is going to be entered into a drawing for one of these buddy jackets. So we'll be giving away two. So thank you, everybody who was on this call. And Mark, do you have any? Jason had to jump because he's got another call. Do you have any closing remarks or anything else you want to say? I think we covered a lot.
Yeah, no, and kind of like what I was saying earlier is I'm excited to be in the long-term care market right now. It's I think a renaissance of opportunities. Phyllis, you've been in the market for a long, long time. I don't know that I've seen in the last 20 years this much, new carrier, new types of products coming out. What is your sense of that?
I just started to type into the chat. We have more options today than we've ever had.
Yeah. Yeah.
Really, we do. And when people say, "Oh, what's happening with long-term care insurance?" It's exploding. And
Yeah.
I just want to compliment you and Buddy INS, your whole team, because I keep telling people you're doing more for our market than anybody else right now, and I'm just proud to be a part of it.
Yeah, we appreciate that and all your support, Phyllis.
Yeah, thank you, Phyllis. All right. Any other questions? Otherwise, we will cut you all loose.
I did link the study groups that we do have every week. They are in there. If you just click the link, it's super easy. You can just add it to your calendar. You don't have to sign up, enter any information. It just adds it right there to join our weekly study groups for both group and individual.
And you can go
Thank you,
back for the
Rita.
history, right? Yeah.
Yes.
Yep, and we have all the recordings to every study group we do. And when you
Yeah.
do join that, you'll get those recordings as well, post after they're all done and edited, and a summary of it as well, so you can digest it in two different ways.
Yeah, if you
And when-
haven't had
when
enough
are the
content
study-
yet, we have 250 hour-long recordings for you on all kinds of different topics. So you will not run out of stuff to learn from.
That's
And when
right.
are the study groups again?
Tuesday and Thursday at 1 o'clock Pacific, 4 o'clock Eastern time. Same time as what this session is today.
Yes.
This is actually one of our study groups.
I just
And we
linked
just
it in
did
the
one
chat
on
also.
international benefits, for example. Yeah.
Yep,
we
Phyllis
try
just
to get
presented
everything.
on Tuesday. Yeah.
Yeah.
Then you can click those links right in the chat and it'll take you right to it and add it to your calendar.
Thank you. Thank
Yeah,
you.
you're welcome.
Welcome.
All right, everybody. Well, thank you again so much for participating in this. It's really becoming an annual like extravaganza. So I very much appreciate everybody's participation, and the questions were just fantastic. So watch for your link to the replay, and yeah, we'll hopefully see you in some study groups in the near future. So thank you, everybody.
Mark, if I
Thanks
may,
for having us.
Mark, are you guys doing any reserve transfers when you pick up the old carrier's product?
No, I mean, not on the broker side. That would be more on the carrier side, I think.
Right. Okay.
Yeah.
Thank you.
Thanks so
All right.
much.
Very
Thanks,
informative.
everybody.
All right.
Bye.
Talk to you soon. Bye.